At the European Central Bank, Mario Draghi had a decision out today. It seems underwhelming a bit for the market. It seems like they wanted more. Do you think the ECB is doing enough?
Listen, I think so, and I think that there was not any specific surprise in the comments. A slowdown, but a relatively modest slowdown. So probably the ECB will keep its rate as they stand currently. Not a big surprise, and financing conditions remain exceptionally good.
Draghi rejected suggestions that negative rates were damaging to the health of European banks. What do you make of that?
What I will make is that, yes, if it helps the economy, at the same time, definitely it erodes revenues. And I must say, I can see the difference. We have different activities in the Eurozone and outside the Eurozone. It's much easier to do retail banking in more normal interest rate environments. Like Russia, or like the Czech Republic, or like Africa. So definitely it puts pressure on profitability.
I want to ask you about this environment we're seeing. In recent weeks, a number of Wall Street CEOs have sounded the alarm about coming up in the second quarter, this environment. Brexit uncertainty, trade uncertainty, even today, Credit Suisse and UBS as well in Paris at a forum was talking about this. Are you seeing that same environment?
Listen, I don't think there's anything specific today compared with the way we saw the world beginning of this year. Beginning of this year, we say, yes, we see a slowdown in the economy, progressive one, not a catastrophe, more perhaps acute in 2020 than 2019. Second, interest rate will remain low for longer. Third, in Europe in particular, yes, capital markets are under pressure with regulatory framework. There's nothing new, but there's no change in the negative side. What is important is to adapt your business plan model, and that's what we are doing.
Jamie Dimon's saying, though, that trading revenue slumped 4 to 5% the first few months of the second quarter. Are you seeing similar trends at SocGen?
I don't like to comment on the coming quarter. We are confident in our capital market activities. We are adapting it, and I think we can do a good performance going forward.
In which businesses have you seen relative strength versus weakness?
As we've said, we have, for example, worldwide expertise in the development of investment products. That's something where we are extremely good, and also we are good in financing products. So I think we are pursuing this while we are reducing our scope of activity in products or expertise where we think in the long term we will have a difficulty to compete.
You said you had to, adjust the business. I mean, we spoke a few months ago, and we also reported that you're shedding the emerging markets desk. Where else are you looking to potentially cut?
As we've said, we are cutting, in particular, in the commodity agency, so commodity principles, business. It means we remain absolutely committed to commodity finance, to commodity agency, for example, on the future side. But yes, we are reducing our activity there. We are refocusing our prime services, its customer base, and we have decided to cut also, effectively, as you say, in the FIC, in certain credit, small fixed income credit activity, emerging market activity, and in our prop trading activity. But we remain very consistent. We keep the consistency of our business model with our core clients, and I must say, being here in Russia, we are developing very well, for example, in Russia, with our strategic clients.
But what regions do you think would be most at risk? From emerging markets was one. Is it Africa? Is there anyone that desks the US or UK?
Listen, I think when we build a business, we need to go and look a little bit beyond 1 quarter or 2 quarters. Fundamentally, the world economy is probably slowing down. We are probably close to the end of a cycle, an extraordinary growth cycle. We see probably a slowdown more acute in the US economy versus currently still good performance. Eurozone should remain more or less at where it stands, 1.3, 1.4. We are remaining positive in Africa, in Eastern Europe, in Russia, compared with these more developed economies.
You've also announced job cuts. Where are we in terms of the job cuts and restructuring?
We are exactly in line with our plan. We have to go through processes with our trade unions. We have been successful in that thing, and so beginning of the third quarter, we are going to effectively implement.
It looks like Commerzbank may now be in play, and there was just news today that Germany is in discussions with the Netherlands about cross-border consolidation. You once bought a unit of Commerzbank. Any interest there? We know that they're looking to do something.
Listen, I will not comment on any specific situation. Consolidation of the banking industry in Europe should be a logical outcome of a completed banking union. Do we have today a completed banking union? Do we have the conditions for that? Certainly not. So we have to wait in the coming 2 quarters to have more visibility on whether effectively there is a willingness in Europe to complete this banking union, at least to make it more consistent. And second, also on topics like the implementation of Basel IV, which is important to understand the valuation of certain activities and assets. When we will have more clarity, banks will see whether, beyond building strong standalone strategies like we do, there is something which makes even more sense in terms of value creation. But let's wait, it's not currently the right time.
For you right now, it's not the right time.
Not just for us, I think you will not see so many things happening in the very short term.
Can you envision a scenario where, even without a banking union, SocGen can opportunistically in terms of acquiring assets?
Yes, I mean, the priority today for us is to ensure that we have the right capital base, so it means focusing on that and not making big acquisitions. Secondly, effectively improving the profitability of certain businesses. That is our short-term focus. In the longer term,
when long term? 2 years, 4 years?
Yeah, the horizon for this is 12 months, 18 months. Beyond 2020, we will see again where these banking unions stand. We will see where I'm convinced that we are one of the very few European banks with good long-term growth prospects, with activities such as Africa, Russia, infrastructure finance, etc. We want to take advantage of this. We will see whether there are opportunities which can create more value. But let's first stick to our short-term objectives. It is my priority.
Your shares have underperformed peers, though, especially recently. How do you plan to reverse this?
I think I've shown in the shareholder meeting that we have been better than European banks in the last 10 years. It's fair to say at the beginning of this year, with what we have announced, there was a question mark on our capital level, etc. We are addressing this. I think the first quarter was the first answer. Now we have to stick to our commitments, deliver quarter after quarter, and I'm sure that the market reaction will be positive to this.
I know you're not going to comment on the second quarter, even though some other CEOs have, but the things they did talk about were trade war, Brexit uncertainty. We have Xi Jinping here in St. Petersburg today, so trade wars is on the mind of a lot of people. What worries you the most?
Listen, yes, there are effectively this kind of risk. Whether it will go in directions which are difficult to control, I have a doubt, because at the end of the day, in particular, I think the US president might also think about his next election in 1 year time. Brexit remains, yes, a risk. If it goes in a hard Brexit, it will have an impact, in particular in the UK economy, in Europe. So yes, these elements could deteriorate a picture which is, as a central scenario, a slowdown. But I mean, we have to focus, again, as I've said, on also our own challenges, which is digital transformation, cutting costs, adapting to effectively a less favorable environment, a regulatory side also. So, I mean, these are independent from the macroeconomic picture. We focus on this, and yes, I'm confident in the capacity of Societe Generale to fare a slightly less favorable environment.